Good day, traders. The 4-step method to high performance trading is a free course download for increasing your confidence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be discussing breakouts, understanding breakouts, the importance and the relevance to the Monday, Wednesday, Free Cash Wednesday trades and Free Cash Friday trades, Day 3 breakout traders in the markets, and 3 days of breakouts or 3-day setups in the markets. So the playlist, as I mentioned, if you're new to the channel or if you have questions, go back through the playlists. Everything you can search for is in here. And as one trader commented, oh, great, I've got to watch all these videos. No, but it's a library of information. The most recent folder, everything you need is in this playlist, is very comprehensive and in detail. Timings, levels, behavior, price. You can look, and it's here for your disposal. You don't have to look at it, but it's all here. All your questions are answered. And it's about understanding the importance of hunting out the best trade setup, the best instrument that is set up for a parabolic 90-10 opportunity, not a 50-50, try to buy the low and get the direction right, or sell the high, or catch a move, or any of that sort of gibberish. But it's about identifying rinse and repeat trade setups that you can build your trading business on. So if that penny drops and you understand and that's something that you're looking for, everything you need is in this list. Most recently, I've put together everything you need is in this playlist, which is very, very specific to the levels, the timings, the behavior of price. And so today we're going to be talking about breakouts. We're going to be walking through some simple concepts, the 3-day cycle, which again, it's as simple or as complicated as you want to make it. Day 1, day 2, day 3, Monday, Tuesday, Wednesday. Reset, day 1, day 2, day 3, Wednesday, Thursday, Friday. Very simple, very specific, and very relevant to the session that you're trading. Build a basket that is relevant to your session. For example, if you're trading Asia, trade Asian cross pairs, but also I would look at the major pairs. They can move in Asia maybe once a week. Listen to me closely when I say this. I'm looking for 1 or 2 parabolic best trade setups, whether they be front side or backside. If you're not sure what that is, let's take a look at the playbook. Every week I'm hunting for opportunities and templates, and typically they're going to be pump and dump templates, as we're looking at here from the playbook on the British pound. Front side is the pump, day 1, day 2, day 3. We may not have anything that's relevant or optimal in the session that we're trading on the front side. The front side is the pump, but we may have the dump side. It may be on day 2 on the back side. Wednesday's a reset. We may get a perfect opportunity for a parabolic 50 pip free cash move on this particular instrument, but there might have been a parabolic move on the Euro Aussie on day 2 on the front side, or on day 3 on the Japanese yen, or on gold, or on oil, or the S&P. I could care less what the instrument is. I want to know, do I have a 90-10 parabolic trade setup? And here's an example of a dump and pump template. Day 1, day 2, day 3 parabolic move on Wednesday, Free Cash Wednesday. And so, yes, it requires some effort. And unfortunately, that's the nature of this game. There are those that want to succeed, and they will do the work that's necessary to identify the best instrument that is set up for a parabolic move in the session that you're trading. It's really simple. After a while, you'll get to recognize that there's inside day signals, as we see here on day 2. We might have a first green day, as we see here on Parabolic Free Cash Wednesday, that dumps down and gives a day 2 on the backside on Thursday session trade in the US window. A dump and pump template within a larger dump and pump template. So there's some simple concepts, and really, if you step back and just, as Jim Rogers says, sit on your hands and wait until the money's laying over on the corner, and all you have to do is walk over and pick it up. 1 or 2 parabolic trade setups, whether there's, it's after a news catalyst or without a news catalyst, or whether it's in Asia on the backside or in a stop hunt in the Asian session on day 2 because you're trading Asia on this instrument, or whether it's in the US session, or maybe you're trading London on the backside on Friday, on Free Cash Friday for the parabolic move in the Asian session, in the London session. So if you have a basket that gives you a varied selection so that we can filter through whether it's 6 major currency pairs, a couple of Aussie cross pairs and yen cross pairs for the Asian session and London, Swiss franc, maybe a couple of Swiss crosses as well in the London session, oil, gold, indexes in the US window as well. There's enough instruments just to filter through when to look for something setting up over the course of the whole week, maybe just for Free Cash Friday. As we saw last week, we saw several large moves on Free Cash Friday. We saw some large moves today on a Tuesday, which is what we're going to talk about today. When I'm not on a Wednesday or a Friday, I'm looking for 3-day setups on Tuesday and Thursday. Let's take a look. Understanding breakouts, that's what we're going to talk about today, because that's what allows me to identify an instrument that potentially is going to give me an opportunity maybe in Asia or in the US window. And for example, just for simplicity's sake, we'll start with just looking at Free Cash Wednesday, Free Cash Friday. We can get an opening range on Monday that sets our high-low heading into the new week. I'm going to emphasize the importance of understanding Monday's opening range and initial balance for Free Cash Wednesday, Free Cash Friday, but also 3-day setups and 3-session setups. So if we have our opening range on Monday and Tuesday breaks out of that opening range, we trade higher, we might get a sell high setup in the US window. It breaks out, but it closes back inside of the high of the day. Now, as we head into Free Cash Wednesday, now here's a couple of scenarios. We could have a market that it's the Euro Aussie and this coils for an explosive move on Free Cash Wednesday, a dump and pump template in the Asian session. This might be the Swiss franc, and the market may just sort of gradually push higher and break down in the London window and push back up into the peak formation high and break down in the US session for a parabolic reversal trade on Free Cash Wednesday. Or this market could even push higher in Asia and London and into the US window, and nothing happens. And traders are saying, well, yeah, but you said Free Cash Wednesday. But unfortunately, you're looking at one instrument and we're still front side. And here's the concept of front side, back side. We may see this market go parabolic in Asia and pump back up in the London session into the US window and break down later in the US session. Now we're on front side, back side, heading into Free Cash Friday, first red day. We could break down on Friday, or this market may push higher in the US window, and we've got a larger, higher high dump and pump template that just pushes higher into the close of Friday. And there's no Free Cash Friday trade on this instrument, but we had a perfect parabolic opportunity on day 2 after day 1, day 2, day 3, as we see in several Asian crosses, but maybe nothing in the London or the US window. Maybe a session scalp, that sort of thing, but nothing on Free Cash Friday. Last day I went over a video on breakouts and understanding the day count. And so if we're inside of a level, Monday resets to start a new timing cycle, but I can still look for a 3-day setup on a Monday, which would come from potentially maybe a Thursday, peak formation low, a higher high on Free Cash Friday that comes in and goes into consolidation on Monday. We still have an inside day, but we may have a market that pumps up in Asia, pumps a little higher in London and dumps down, and we can get a parabolic continuation trade in the US window on Tuesday. So that started on Thursday, Friday into Monday. So we have once Friday's high of day has been broken, which it wasn't on Monday, but Tuesday broke it. That confirms Thursday is day 1, Friday is day 2. Monday is an inside day. They trended higher on Tuesday, day 2, but we might have major red news in, say, London. They break down. Doesn't do much in the US window. Traders miss the continuation trade in Asia, or perhaps it coils and pushes a bit higher and breaks down in London. whatever that may be. But that's what starts a 3-day count. So day 1, day 2, signal day is an inside day. We might have a false break now. Trap volume for 1, 2, 3 days. 3 days of breakout traders in the market into our new week that gives a parabolic move maybe on Wednesday or Thursday. We have breakout traders in the market. They can start on a Monday. We could start our breakout traders on a Monday. A break of Friday's high. There's our opening range for the week. The market may close right near the high of the day, and it may break down on Tuesday or be an inside day. They might trigger the low in Asia of Monday before pumping back up, and that may start a 3-day count that rolls over on Friday, a pump and dump template. Wednesday, Thursday, Friday. We've seen that several times. That's just one type of option. But until there are breakout traders in a market, until a high or a low level are broken, that market is inside. And so the market, once it's inside, is still something I will avoid. Now, here's the difference. Here's the one thing that will eliminate that, is that if this is a day 3, so we have day 1, peak formation, a day 2 that pushes higher, and we go into a day 3, closing price is 50%, we may get a capitulation move on a day 3 that's a narrow range day, as we saw in gold. Came off of major red news. That was a dump down, went and put in a lower low that started our day count. Day 1, day 2, day 3. We saw something similar on oil. Breakout. First days of breakouts. Day 1. Second day of breakouts. Day 2. Third day of breakouts. Day 3. And then the collapse all the way back down to where that move began. Broke down in London. As the U.S. window was opening, it was breaking through the low of the day in a parabolic existing move. That went on a range expansion for more than 100% expansion of the high-low range on our day 3. So the importance of the day count comes from understanding breakout traders. We can just have our opening range and initial balance, and what that is by the time Monday, Tuesday has printed, we have a peak formation low and a peak formation high, just for an example. And we're either going to get a dump and pump trend continuation trade, as I've gone over, and this could be Friday, this could be, or Wednesday, or we are going to get a pump and dump template. Now, one trader said, so at 9:30, it could go either way, 9:30 New York time. Now, I'm going to ask you a question, the trader that asked me that question. What does this look like? If I'm pushing back up into the high, is that dumping or is that pumping? There's a pump for a dump template, and then there is a dump for a pump template. Now, let's review that, because I've gone over this several times. As we just talked about in the templates, a dump and pump can be day 1, day 2, day 3. It can be a whole week. This could be a Monday, Tuesday, Wednesday, Thursday, Friday. Pump and dump, on the other hand, is going to be the other way. Pumping up for the dump. Now, that is different from that. So at 9:30, are they working the high or working the low? So here's my suggestion. Go and do some homework. Study what a reversal trade looks like in terms of if it's making higher highs. For a dump, it would be broken out. It'll be breaking out, pushing higher outside of the daily high. Go back and look at the indexes. Go look at gold. Once it breaks out, if we're up high and 9:30 hits, are we up high or are we down low? Are they working the high or are they working the low? We're probably going to see a retest if it's a well-engineered template. Now, I've talked about well-engineered template, 3 levels of rise for a dump. That can be outside of the high of the day, or it can be working from the low of the day. Same chart, same template, different setup, probably on a different day. Now, I'm not being sarcastic. I'm being dead serious. If you want to make money, master the setups. I'm not being a smartass. I'm being blunt honest. There are so many opportunities, but just sitting back and crossing your arms and being smug and arrogant and not taking this as serious as a business is insulting to the other traders who are working their butts off, who understand this. And number one, they're willing to sit on their hands until they understand it, not just sitting back and pouting and moaning. Like here's the thing. You're in a business where you want to make a lot of money and you're competing against the smartest, best educated, best equipped, well-trained people in the world. And you're pouting and crossing your arms saying it doesn't work. But there's a lot of free cash laying on the floor and there's a lot of people picking it up. So your decision is this: either quit and walk away, or refine your edge and get 1% better every single day. Master yourself, master your attitude and your perceptions and your beliefs about the markets. And that's as blunt honest as I can be, because the game taught me the game and it didn't spare me the rod. So I have no empathy towards that kind of mentality when it comes to trading, because every single person who has had to reach any level of success in this industry has had the shit kicked out of them. Whether you believe that or don't believe it, or whether you believe anything that I'm telling you right now or you don't believe it, means nothing, because I'm still going to go back tomorrow and I'm going to hunt out the best setup and I am going to lock in some cash and walk away, because I know if I hang around and keep trading and get more pips and everything else, I'm prone to giving it back. And that is not part of my business model, my trading business. So I'm extending that opportunity to you to do the same thing, to level up, to get better, to master yourself, master the setups that will rinse and repeat over and over and over again. Why do they rinse and repeat? Because that is how the market takes the money from the many and transfers it to the few. It gets traders chasing moves up higher before dumping down and wiping out. People are buying it up here, chasing the move, and they get wiped out. Or they're holding on for more, or they're, whatever they're doing. Or the market may break out. It may break out. And it may creep down and pull back and go parabolic into the close of the U.S. window and continue in Asia for a dump and pump template. Now, the other option is this. It could just move all over and doesn't really set up for anything, but it's your favorite instrument and you're trying to trade it and there's actually no setup, and you go, oh, but it was day 3 breakouts, but you're trading in the 25 pip range and you're buying in the middle and you're, getting stopped out, and then you're complaining saying, I haven't seen any of this work, but you're trading a garbage template. When in reality, you might have missed a perfect opportunity on a pair that didn't really set up on Wednesday, Thursday, but it set up on Friday for a parabolic move on a 3-day dump and pump template that went on a measured move range expansion, and all you had to do was sit on your hands and wait for Free Cash Friday and get into the trade. So I'm not being smart aleck, I'm being serious. Everything you see is only what you want to see. So if you step back and look at where are vertical moves made, step back, understand what instruments can potentially move in the session that you're trading, and be willing to learn, be willing to be patient, be willing to build on one really good trade at a time that's parabolic, because parabolic trades can explode your trading account. And, there's no other easy way to trade. If you want something that's, going to just be cookie cutter, rinse and repeat, win some, lose some, get an EA. Get somebody to build you an EA and just put a bunch of capital and build 3 or 4 EAs, mean reversion, trend continuations, reversals, and just be willing to handle the swings, highs, and lows of that. And at the end of the month, as long as all those systems running together are green, then that's okay. That's how a lot of funds run. They have 100 different types of models running with a huge basket of capital that overall produces a positive outcome growth on their fund every month. So, the successful ones do. But that's it. And so I've stepped back and I'm looking for 2 or 3 parabolics. Now there's parabolic opportunities every day if you're willing to just sift through a different basket. Like for me, I've got the option to look for some trades in Asia. 90% of my trades will come in Europe. This week we've had some fantastic opportunities in the first 2 days already on the Euro-Oz. There's been trades in the London session on Swiss franc, Euro, to name a few. So it's important that you take responsibility for your decisions. And it's important that you are willing to sit on your hands and not just try to trade every day, trading stuff. But here's the simplest thing I can reinforce to you. Pump is front side. After it pumps, I don't know what it's going to do. But I'm looking for maybe one trade. It could be Asia on Wednesday. And this pair may not offer anything else. It may just peter out. Or this trade may actually be a first red day that breaks down and doesn't really go on Thursday, but it implodes on Friday and gives us a measured move range expansion on Free Cash Friday. That type of opportunity. We've talked about the levels, closing price, high day, low day. Now let's take a look at the charts. Now we had CPI today. This is the British pound. And just coming into our Monday, Tuesday, we had an inside day on Monday. We had a peak formation high made on Thursday into our closing range of the week. So Friday took out Thursday's low. That means we have breakout traders in the market. So remember what I said in a previous video. We have a break of Thursday's low of day. That means right away the high of Thursday is a potential level this market could work back to. How could it do that? The first green day, it might build a parabolic trade on Tuesday for a day 2 trend trade, whatever. But coming into CPI, we had a double inside day. So at that point, we had lower highs, higher lows inside of Monday's inside day. Now that's a recipe heading into the Fed, obviously, as we saw, for them to spike both sides. Now this is a 5-minute chart. Knowing that yesterday was an inside day, if we just remove those diagonal lines, now we can see obviously the market spiked up to the inside day opportunity potentially from the playbook. Inside day can be a false break trade opportunity for a session trade or a high of day, low of day opportunity or a trend trade depending on how that market sets up. Now I'm just demonstrating this particular instrument as an example of breakouts. We didn't have any breakouts on Monday. And if we just back this up, this is a 15-minute chart, but we'll back this up in a second. So remembering we had breakout traders in the market. The market closed back inside on Friday evening, New York time. It opened on a gap, but then came back inside and closed back inside on Monday, our opening range. And that set the tone for an inside day and heading into major red news. So we're technically in a trading range between Thursday's peak formation high and Friday's peak formation low. Peak formation consolidation. So if we go to our 5-minute chart, we have an example of CPI 1, 2, 3, 3 pins to the high, and an engulfment on our 5-minute chart for a session trade and a 1-bar stop. As I've talked about, after a pin high and we get our little consolidation bar, right here, the high of that bar, the engulfment, is my max stop loss. Now this pair gave 50 pips back to the low of the day. So one of the other things that you want to take into consideration on any trade, any instrument that you're potentially identifying an opportunity on is what is my risk reward opportunity? What is the range of this market's high low? If we've triggered the inside day playbook false break trade from the high of the day and we're targeting the low of the day, what is my risk on this trade? This is a 50 pip box, so we're risking in the neighborhood of 15 pips for a 50 pip profit target. An example of just a high a day, low a day opportunity with a news momentum catalyst. Now let me clarify, we are not trading the news. Okay, this is a 5-minute chart. This is 15 minutes after CPI's release. We've already pinned the high of the day, and I'll repeat, 3 pins to the high. 3 pins to the high bull is engulfed. We have our stop in place. It's a momentum catalyst trade. And all this is, no matter what I do, when I take a trade, it's just a trade. You're putting in an entry, a stop loss, and a profit target. That's all I'm doing. And then I'm stepping back with the thesis being that we've triggered breakouts, we've hit stops, and we're going to be targeting the low of the day. Why is that? Because we have stop losses down there on inside bar traders who have triggered, potentially gone long on the break of this or chased the momentum up, or been triggered on the break of the high, and then we're targeting the opposite side of the range. Let's take a look at the euro. Again, just simple stuff. We broke out on Friday of Thursday's low of day. Breakout traders are in the market, but it closed back inside. Okay, so Monday's day one in a new timing cycle and a Monday to Wednesday template, day 1, day 2, day 3. It's an inside day on Monday. We have trapped volume at the low of the week, and we're closing back inside of Friday's low of day and Thursday's low of day. Remember, we have breakout traders in the market. Once breakout traders are in the market, Thursday's high potentially has money above that range. Why is that? Because longer time frames are selling down low, 4 hour, 1 hour, daily levels, low, maybe even weekly levels, and their risk point is going to be the high of Thursday. Now Friday, they may adjust that down. Even though it's an inside day, if you're short here, you're moving your stop tighter on after Monday trade or into Monday's trading at the high of Friday. And when Monday closes, you may even move it lower so that now your potential loss is minimized. If you're getting in at the break of the low of Thursday, your stop is down here now instead of up at the high of Thursday, which can tell you where is the volume getting trapped. Here's a question. Are they working the high or are they working the low? Peak formation low, 1 push, 2 push, 3 pushes, and reversal, consolidation. Let's go back to a simple concept, even on an inside day after a failed breakout, potentially failed breakout, peak formation high, peak formation low, consolidation. We're on day 2 in our Monday to Wednesday template, but we're also on day 3 from our peak formation low of the week breakout trade. And where are we targeting potentially for a parabolic move in the London session? Our level is high of day. We've traded into closing price. We have volume trapped down low, higher highs now for a parabolic move in the London session, targeting the high of the day. Now, this market has obviously spiked up. We'll take a look at this on the smaller time frame. Same principle applies. If we were out before news and waiting for after the news, we have our engulfment of the high bull. And this is, again, an example of where we want to be targeting. What is our risk reward on this particular trade setup? So obviously the pound offered us 50 pips. If we were to have measured, say, anything back in this range, targeting the low of the day level or even the high of the day level, we could have been optimistic and been going for closing price, but this is a first area of potential major resistance. This particular setup was a lot tighter in terms of its risk-reward opportunity. But on the front side, traders who were trading long in the London window had an opportunity perhaps for a 25-pip move or further if they held onto it, but heading into the news, exiting out of this trade, continuing with that reversal trade thesis, a dump and pump template, trigger breakouts, consolidation, peak formation high, peak formation low, and even narrower consolidation for a parabolic move in the Asia-London window, day 1, day 2, day 3. What starts our day count? The peak formation breakout that fails, the inside day, potential reversal day now, not a false break, but a reversal opportunity. We're down low, targeting first area to target is Friday's high of day, with the opportunity potentially to go to high of Thursday, out before major red news, just so we don't risk being spiked out or any unnecessary volatility, but understanding breakouts. Now remember, Monday, day 1, opening range of the week, Tuesday, day 2, Wednesday, day 3, the midpoint range of the week. Thursday, day 2, it's a reset on Wednesday. Thursday, day 2. Friday is day 3 for the closing range of the week. So when this market closed down like this and it's a failed breakout, it's got my interest now because this can now be day 1, day 2, and a day 3 opportunity on a Tuesday. That's a 3-day setup. Looking at West Texas, I put this on the community page. A lot of traders asked how I had this as a 3-day count. Now, this is the exact same chart as gold last week, lower low on the inside. First day we have breakouts. Okay, as soon as we break a daily high, so Friday is the closing range of the week, that means that on Friday we broke Thursday's high. We have breakout traders in the market. Thursdays are our low of the week, and it's a lower low, right? We broke down. We're making a lower low. We broke out on Friday. That's the first day of breakout traders in the market. That starts a new day count. Day 1, day 2, day 3 on our Monday, which gave a great opportunity in our London session. Now, I had several traders tell me they got chopped up in the U.S. window. Now, here's a question for you. In the U.S. window, was it a sell high opportunity for a collapse? Or did they put in a peak formation low in the London window and take you back down into that peak formation low for a continuation trade in the U.S. window? So I want to repeat this to the trader who said, so at 9:30, you could go, it could be day 3 and it could go long or it could go trend or reverse. Now, here's a question. Does this look like a reversal trade down low? That's the sort of thing you need to be thinking about. When you make those sort of comments, I'm going to tell you, go and do your homework. Go and do your homework. That's not me being smart. That's me telling you to go do your job. If you're a trader, understand what you're looking for. This is not a sell high setup on day 3. Day 1, day 2, day 3. It was a sell high setup in London, and then they drove you back down into the peak formation for a buy low session trade on day 3, back up towards the high of the day. Now, here's a question. One, pump, day 2, and then pump on day 3. And as we come into our U.S. window, we're already breaking down. We're already breaking down below closing price. But let's take a look at the low of day level and the time. Breaking down, we've broken the high of day level. So what should that tell you on 3 days? We've broken the high of day level. So what that tells me is this is in play. If it's inside and we haven't broken the level, it already better be coiled underneath sideways at 50% of the range for a parabolic move. Now, this is our U.S. window right here. First hour. Where are our peak formations? Are they down or are they up? What is the thesis on this trade now? We've had 3 pushes to the high of the day. This is a parabolic coil heading into the second hour. And if you're not sure what that is, go and study it. Because this is the exact same trade we saw last week on oil. A day 3, except it broke out, but it's the same trade. Range expansion opportunity on day 3. Okay, so let's back this up to the 15-minute chart, because I'll repeat this. On a day 3, what are the potential? If we get an opportunity for an explosive day 3 trade, I'm looking for the range expansion opportunity. Now, we saw this a few weeks ago on oil as well. Day 1, day 2, day 3, the trade broke at the low of the day level at the beginning of the second hour. Same trade. Several traders hit this. Now let's go back again and just look at our longer time frame. Day 1 breakouts, day 2 breakouts, day 3 breakouts. Look at our 1 hour inside of our universal EMA. Our universal EMA on the 1 hour. Who's driving this trade? Longer time frame traders. Who's trapped? Look at the pins in the US window. If you bought at closing price on the longer time frame, who's trapped up high? Take a look at your U.S. window closes. They're at 50% of the range. The U.S. window's opening up underneath. 9 o'clock, the old NYMEX open is opening up right near the low of the day. What is the opportunity? It's coiled in a parabolic move inside of our EMA. It's coiling for an explosive range expansion. So go and study these charts, but understand what breakouts are about. So let's take a look at last week. We broke out of the low of the week, right? So previous week, and then we went day 1, day 2. We had breakout traders in the markets. Day 1 breakouts, day 2 breakouts, day 3 breakouts, a high of week, high of month, shorting opportunity on oil that collapsed, first red day. Okay, first red day, pumping back up for a move that occurred late into Friday's session. Day 1, day 2, day 3 breakout, traders in the market. Day 3, reset, new week. So traders are saying, what's day 4, day 5 breakouts? No, I just start the count again. Why? Because we broke out of the low of the week. Breakout, pullback, day 1, day 2, day 3. When we get into our US window, we're already down here. We're already down here when New York opens. So it's day 3. Is that a reversal trade setup? I'm not sure. Let's take a look at our universal EMA. There's a time and a place. And what should happen on a day 3 again? A potential range expansion. So I want to really emphasize to traders, I'm not trading in here. I'm not marking off any levels. I'm not doing anything. If the market hasn't broken out, okay, and so for example, on this particular day, the market is inside. We haven't broken a level, but my thesis is already first red day. What are they doing? They're pumping it up. They're pumping it up into our peak formation. Let's just bring this down. I'll just lower this line. They're pumping it up into our peak formation. Okay, inside here is looking for a sell high setup in an existing broken out market for the reversal. That is not a short squeeze. Short squeeze, as we saw in the indexes last week, worked the low and made higher highs back into peak formations for the explosive move up. There's a difference. They are not the same. And some charts are going to be garbage. Several traders hit the Canadian dollar today, which was an excellent opportunity. Let's go take a look at that. So Thursday is our day 1. Why is it day 1, Stacey? Because Friday broke out and broke the low of day level. That's the high of the week. Day 1, day 2. Monday was an inside day. Now it slightly tapped the low of the day. I consider that still an inside day. It's a narrow range day, and it's inside of our high and low. Now coming back to our reset on Wednesday, notice how our peak formations are down, and we closed higher and broke out on Thursday. That formed a low. Why did it form a low? Because we have breakout traders in the market. Then we had breakout traders of Thursday's high. So Wednesday's low, Thursday's high forms a large rectangle. So if you're trading inside here, you're inside. This is when you're inside. There's no parabolic setup. We have a peak formation low, peak formation high, and we have a consolidation that is range-bound trading. So there's 3 things that markets do. They break out, they pull back, and they continue. They trend. They break out, they reverse, and they fail, or they stay range-bound in a trading range. But what did we get on Tuesday? So we have a peak formation high. We have a breakout on Friday. We have a narrow range day that doesn't quite take out the low. So again, the bottom of our rectangle is intact. We have a peak formation low of the day put in place where they trigger shorts. They spike down on major red news. Now let's take a look at that. So we go to a 5-minute chart, Canadian dollar, timings, levels, behavior of price. Now let's just zoom in. Remember, simple stuff. Dump and pump or pump and dump. Are they working the high or are they working the low? Okay, peak formation low. They've dumped down and engulfed. And even if we wait, so let's just wait to the end of the hour. Pin hammer, engulfment pin hammer at closing price level. Timings, levels, behavior, price. Where do I want to get filled? I want to get filled better than, if I can, or as best I can, at or below closing price. Why is that? Well, I've already got my thesis in place. We've hit the stops. I got a peak formation low. I want to get filled better than closing price. Why is that? Because I'm targeting high of the day, the week, or previous. That's an inside day. Remember, we're targeting up high. So we want to try and get at least 25 pip box. We're maybe hypothesizing a measured move. So if we were targeting number 1, dump and pump or pump and dump. So coming back to the trader who said, oh, well, is it going up or is it going down? Because at 9:30 it could be anything. No, it's a dump and pump template. So you've got to study this. If you don't know what that is, you shouldn't be trading. You shouldn't be trading this because clearly, are they working the high or are they working the low? They dump it down into the peak formation engulfment, Pin, hammer, end of hour. So thesis being, once this engulfs, I'm watching how price behaves, but where do I want to get filled? Better than, or as best possible if I can, which in this particular case we can, at or below closing price, including the spread. We're targeting on this potentially at least 25 pips. We're risking on this particular trade. This is a momentum trade, right? It's momentum. Put our universal EMA in there. What does momentum mean? It means it should explode. We're not trading back and forth in a trading range. We just had a major red news catalyst. This is a coil. This should explode. But it takes an hour to do 25 pips. So if it takes an hour to do 25 pips, 25 to 30 pips, what do you think I'm going to do? I'm going to lock in the money. Why? I have no unrealistic expectations. New York's already open. We're coiling sideways. Take the money. It's over. That's it. That's the trade. It's an easy, high quality, high probability session trade. So 25, 75, 50, whatever. It's the same concept, just a different range. Different instrument, lower volatility, Canadian dollar. There's our trade. We got a larger template in place that backs that up. A large rectangle. Peak formation low, they stop hunt where? Into the high or into the low? Are they working the high or are they working the low? There's our range expansion. We got almost 2, didn't quite get there. Take the money and run. That's it. That's as simple as that. Euro-Oz, we'll just go back to the 1 hour chart. I got the levels on here. And remember, we're talking about breakouts. We got a breakout on Friday, the closing range of the week. Study, opening range, midpoint range, and closing range. Traders blow over this in the playbook, and then people message me all kinds of ridiculous stuff. Study the business of trading. Understand what's going on here. You can study all this other garbage, but what matters is this. Can you rinse and repeat your approach to the market? So I've got volume trapped down low. It's really simple. I don't give a hoot if this is oil, gold, or indexes. Okay, day one. How do I know it's day one? Well, because on Monday they broke day 2. But here's the thing. It's a first green day. Now, I might have a parabolic opportunity. How do I know that? It depends on how price behaves on the day. Here, let's take a look at how price behaves on the day. There's a coil, higher high. There's our 12 candle window. Now, let me just explain something. This is a rinse and repeat setup. It could be on a Thursday. It could be on a Tuesday. It could be on a Wednesday. This is a rinse and repeat setup. Breakout, pullback, consolidation, parabolic coil into the open of the session for 50 pips. So this is a template. This is a well-engineered chart. It's not guessing, it's not luck, it's not hindsight. Pay attention to how the market closes. Pay attention to who's caught into the market. Okay, this is the business of trading. That's a business model. What are they doing? They're going back to get the money. Who's in the money? People who sold it down low Thursday into Friday. Friday's traders are trapped. Okay, so get that, understand that. What are they trapped? There's closing price. The whole day's underwater. Think about that. Now where are they going next? We're at the bottom of the U.S. session. Who's potentially next? Traders who shorted it down low. Okay, now we got day one, consolidation. Let's just take a quick look at that. 3 levels of rise. On day one, from closing price up to the high of the day, Asia set the high and low. We got a space above double zeros for potentially a 50 pip drop. It only went 25. Went 25 in the U.S. session. Lower low on the inside. Oh, lower low on the inside. Stacey said that's a pump and dump setup. How does price behave in the timing window at the level when it gets there? What level? The upper level, the third level, where the trap volume is. They're not going to go all the way up. Why? Because if they go up, they're going to let losers, people who are losing money right now, out of the market without a loss. What does it do? We had a death candle on the 1 hour chart, engulfment for a 50 pip collapse. Luck, guesswork, hindsight. Yeah, you're right, it's hindsight. Hindsight pays. Who's in the money? Did it blow off 50 pips like I thought it might have? No. Drop down 25, and then they pump it up and trap people in the U.S. session, right? Front side, back side. London traders, peak formation, 3 pushes for a reversal trade. U.S. session, let's go to the news. 5 minutes after the news. If you understand the template, is this a pump and dump? Are they working the low or are they working the high? Does that look the same? Do they look the same? So to the trader who thought they looked the same, there's our box, right? Closing price to the high of day breakout level, which is now forming our pullback, breakout, pullback, Continuation for 2 full range expansions after major red news, 5 minutes after major red news. And I'll challenge you to sit there and look at a chart for 5 minutes and have a think. Is that a long time? You're damn right it's a long time. If you have not, if you have a thesis, that's long enough to confirm. Coil. Is this just a random chart action, or is that a parabolic coil ready to explode? Study where it's easy to make money. You make money on the trade setups that it's easy to make money on, not this. Oh, I bought it down here and held it for 4 hours and then it went off finally. Whatever. Okay? If you got it down here, fantastic. You might take some off, leave it before news, and add more in after the news for the measured move. Templates, trade setups. Dump and pump is not the same as a pump and dump. At 9:30, okay, that's an index. First hour after major red news momentum catalyst, why can't this explode? Let's take a look. There's the U.S. range. Are we back inside of the U.S. range? Is this a failed breakout? Oh, maybe. Breakout pullback, parabolic coil explosion. That is a parabolic trade setup. These types of trades will compound your trading account fast. That's the difference. So study these levels. Understand when you have a market coiling versus something that's just inside or trying to sell the high or buy the low. This market broke out and pulled back and continued for a parabolic move in the U.S. window after major red news. So 1 or 2 of these trades a week, whether it's in Asia, whether it's in the U.S., you might get one in London. You've got different opportunities on different instruments. Have a good basket. Be selective, but study them and understand what they mean. Sitting back and, getting frustrated or banging your head, if you're not seeing this, then just sit on your hands and study. Wait, be patient. Do the day count. Day 1, day 2, day 3. Understand where markets have broken out and where the other side of that breakout level could be targeting if this market reverses. It doesn't have to happen on the day. It doesn't have to happen on the second day. It can happen on the third day. It can happen on a news catalyst. But if there's money sitting there and they have volume trapped on the wrong side, they're going back to get the money. 1% better every single day, traders. Congratulations to the traders that hit those trades. Congratulations to the traders that are working hard and mastering these concepts, because they are not going to go away. It is not my strategy. It is not my model, my system. It's how the markets work. It's how the markets work. Trigger breakouts. Trap traders. Get traders trading on the inside. Get them to sabotage themselves trading a garbage chart. Getting chopped up. Getting frustrated. Getting angry. Over leveraging. Do all the things that mess with your head, or sit back on your hands and understand how to identify a parabolic opportunity. What's parabolic? That is right there. That's free cash. That is right there. Major red news. That is after major red news right there. Those are parabolic opportunities. Trading this stuff is stressful, choppy, and okay, hey, I got 25 pips. I sold it in London at the high and sat on it for 5 hours. I'd rather be in the market for an hour, loading the boat when it's going to go parabolic, because they got people trapped on the wrong side, or they're going back to get the money into traders who are already in the money and that didn't take it off. And they're in the hope trade. I hope it doesn't come and get me. Oh shoot, I knew it was going up. I should have held on to it. I should have moved my stop. No, because the day that you move your stop is the day that it collapses through and blows your whole account out. So don't do that. Done that. I wouldn't recommend it. It doesn't work. It's not going to help you grow your trading business. But it's a winnable game. And these opportunities are there every single week. Understand what breakouts mean. Study them. Breakout pullback. You might be trying to trade the pullback and holding on to it, and it's going to continue. No one to get out. No one a trade's not working. No one to lock in the money. No one to size in. There's opportunities everywhere, traders. Love you and appreciate you. 1% better every single day. Keep it going and keep it growing, and may the markets go with you.